Hey, what's up, guys? Wanted to share this with you guys today because someone asked me, like, hey, Vic, why should I invest in Bell Capital and how does it even work? And my question back to them was like, you got to know where you want your family's money to be. Where's your money now? And they were like, well, and that's because the reality of it is most people, probably like you too, not everyone knows exactly where their money is. So if you take a look at it from a financial standpoint, because real estate is a financial vehicle, that's the way we look at it. Like even though we're looking at real estate as a vehicle for the fund, it is a money making opportunity. It is an investment. So when I was talking to him, I was like, hey, where's your family's money now? I was like, how much money do you have in the bank? And he gave me an amount, I won't tell his amount, and he was like, it was over 400 grand, like as he has in savings and stuff like that spread out, overall liquidity. And I was like, okay, how much is in the bank? And he was telling me that. And I was like, okay, cool. So that's cash money. Like, how much do you have in your retirement account? And he was telling me his retirement account, he has some money in a 401k from a past employer, and then he has his own IRA account that he set up. And I was like, okay, good. So now, how much money do you have trapped in your, like, do you have a home? Because he does have a home. And I was like, how much equity do you have in your home? And he was telling me about that. And I was like, okay, what else? Do you have any like stocks or bonds or anything? And he has a couple of little stocks and things like that. He plays the markets. So once I was explaining that to him, like, dude, like your money's everywhere. It's all over the place. So while you think you have in the excess of 400 grand, that's not even your money anymore. You've already submitted that money, surrendered that money to the bank, to Wall Street, to Fidelity. Like you've already given it away. It's not even yours anymore. Like, and if you don't believe me, go right now and go try to pull out a bunch of money from your bank, and they're going to tell you to come back tomorrow. They're going to fingerprint you. Yeah, like, there's a lot of stuff that has to happen for that to happen. And he was like, "Yeah, I didn't really think about it like that." So for me, that's one of the things I like to ask people. Like, number one, how much money do you have liquid? How liquid are you for you to be able to make an investment if you're curious about one, investing with Bell Capital or any asset? Like, you need to know where that money is. So think about it from a financial advisory standpoint. One, once you kind of know where you want your family's money, do you like one, if your money, and I keep going with the one, so I'll stick with the one. If your money's stuck in a bank, everyone's like, yeah, banks are safe. Well, banks, it's safe for the bank, not for you, right? And you've heard me talk about this quite a bit because you're my people. I say it all the time. If your money is just sitting, money is going down in value every day, every minute, every hour. A little while ago, we did a video and we had CNBC on and they were talking about the CPI report, how that's up. I think it's like 3 point whatever. It's higher than they thought it was going to be. Interest rates that, and I just said this too, Fed's coming in and they're thinking that they may have a hike. There were a lot of people like built in rates going down, but now people are like, hey, it's starting to look a little crazy with everything going on. So if your money's sitting in the bank going down in value based on all the other stuff, based on inflation, cost of goods, right? It matters. So for example, I'll do this. I was born in 1973, right? And this is 2026. So you see that? So this is money. Just take a look at money. This is a statistic, a graph line of what's gone on with value of the dollar since 1973. I'm 52, right? The dollar's lost 86% of its value. The dollar's lost 86% of its value in my lifetime. What does that mean? So even though you think the bank is like, oh yeah, my money's safe in the bank. Your bank, it's safe for the bank. The bank takes your money out and lends your money out 9, 10 times. So for every dollar you lend out, let's say you put $1 million in the bank, whatever. That bank has the opportunity to take your $1 million and lend that $1 million out 9, 10 times. So the bank's money, your money is safe to them, but it doesn't necessarily mean it's safe to you, right? Especially not when statistically your buying power of your money is going down day, hour, week, minute, everything. It's just happening. So that $1 million, if you were to take it out, if you had put it in during that time, will buy you like 86% less of what it was doing. So for every dollar, only buys you 86 cents worth of, or 8 cents worth of stuff, which is crazy. Or $100 buys you $8 worth of stuff. I can't even get my mind wrapped around that. So knowing that right off the bat, you already know that your money's not safe sitting in the bank. It's dying there. It really is. So, and then he was also saying that he has his money in a high yield savings account. And I was like, dude, what is a high yield savings? Like, what's high yield to you? And he was like, oh, they're paying me like 4% on my money, which is a good thing for some people, right? It's, like, oh, it's there. The problem with that is that 4% is still earned. If you want to go get earned income, then great, go do that. Because when you move that earning out, it's still going to get taxes earned income, and you're going to lose, in his case, 40%, 37%, but let's just say 40% of that earnings. So your 4% that you're that of that gain, you're really only getting 2%. So really it's not high yield. It's a yield, it's the bank's yield, right? Because they're going to lend that money out. So that was one. Number two, if your money's sitting in a retirement account, you don't even know really where your money is. That money's controlled by Wall Street. Um, it's going to Fidelity, it's in Vanguard, it's in Merrill Lynch, and you're putting it in an IRA 401k. Either you pay taxes on it now, and then you put it in, and it's gaining or it's in the market up and down with the market, or you pay taxes on it when you take it out, and more money's in the market because you didn't pay taxes on it, but you will have to pay the piper later. It just is what it is. And then at some point, I think it's changed or it's up to 72 or 73 years old. Let's say you're 50 years old or you're 40 years old and you have another 20 or 30 years to be able to make money, stick it off in your 401k. When you hit 72 years old, odds are you're probably going to live another 25 years if you're healthy, right? Because if you're a business owner, you're an entrepreneur, you're a high paid employee, you're probably going to be looking to take care of your health. If you live another 25 years past 70 years old, you'll be 72, 73 years old, you'll be almost 100. And you can live that long with AI, medical advances, health advances going on right now. Odds are you're going to live past your money. But if you live and you don't have the gain that you need on that 4%, because it's a mandatory requirement of you to take out 4% of your retirement account once you hit a certain age. If you live 25 years, that's 100%. So you don't want to be playing with the principal balance of your retirement account. So, but if your money was in real estate, then your real estate is paying cash flow. We're going to, refinance, put money back in, refinance, put money back in. You're never getting to your principal balance because it's in real estate. If you were to make an investment, you're only taking out the cash flow that you would have. And then the real estate, because it's owned by your retirement account, could get passed on to your family, your kids, your great grandkids, whatever. You're just living off the cash flow. That's different. So if your money's in a retirement account, though, you don't know where that money is. It's trapped. It's in Wall Street. It's in God knows what. It's in Lockheed Martin, some medicine that you don't even believe in. It's funding some war or some medicine that you wouldn't take or you wouldn't give to your own family, stuff like that. Like most people don't know that because they just stick their money in a retirement account and they're just hope and pray and they're getting eaten away, but that's not the case. So you need to know exactly where your family's money is. Next, if it's in the stock market, if it's in stocks, it's in the casino right now. Like right now, stocks go up and down. You wake up, it's gone, it's up, it's down. And the reason why I say that is because let's say you're in Nvidia or you're in Meta or you're in Apple or you're in any one of the Tesla IPO that they're going to be doing, whatever. Like you don't know what's going to happen with that. You can't bet on that. If you have to put your money into an investment that's going to be there for you and your family, generational, and you're going to create wealth long term, you can't play the casino game. The only person who wins in any casino is the house. The only people who are winning in Wall Street right now with the stocks and owning those companies, one, you got to take a big position. And if you're a little guy, you can't take a big enough position to make a huge dent, right? You're going to have to ride the wave. If it's in bonds, the bond market's up right now. But again, there's no tax benefits to the bond market. You trade out of a bond, you're going to pay taxes on it as earned the same way you would, like we said, in a retirement account. So that's those vehicles are for Wall Street. They're not for you guys. They're for the institutions. They're for the big banks. They're trading this at a massive amount that the little guy can't keep up with. So if your money is trapped in there, your money is just getting rolled up with those guys and you don't know where your money's at, right? Plus you're gambling. Next, let's say Bitcoin, right? Because I did ask him about Bitcoin. He's not into Bitcoin and crypto, but it's attractive to him. Problem with Bitcoin and crypto and gold and silver is it doesn't cash flow. There's no cash flow from it. So even if your money is in there, yeah, you'll get the bump of it and the ups and downs of the market, but it's going to go up and it's going to go down and it's volatile. I think today, I can look and see, let's see, real fast. If I'm not mistaken, I'm going to go to my CNBC app. Bitcoin is probably in the 70s, 70,000 and some change. That's usually where it's at. Um, yeah, crypto, let's go. Yeah, Bitcoin is at 76,000 right now. Uh, Gold, which I know the gold people out there, they're at 45. Silver's down to 74, 4,500 for gold. And oh wow, the treasury is 4.61. Woo! It's creeping. But anyways, I said all that to say, like, if you're playing that game, Bitcoin doesn't cash flow. It goes up, it comes down. You're not able to take a big enough position in it. So it looks good, feels good. Oh man, I got Bitcoin. Man, I had some, I got rid of it. I was like, dude, I can't watch this thing all day. That's not me. I'm a real estate guy. I'm an apartment guy. I like slow, steady Eddie. I'm not interested in get rich quick. I'm interested in create wealth for sure. And that's my game. So, like, if your money is stuck in those things, you're going to have a problem and you're going to have to continue to buy so much more of that thing and hope that things work out. So, again, the other one is your home equity. I was asking him, I was like, he does have a home and he has equity in his home. There is, I mean, when I was taking a look at the statistics on this, and you guys have heard me talk about this, and there's a reason why I bring up home equity. If you have a home and that you have trapped equity in your home, there's two numbers. One, there's $35 trillion in home, and I went to chat, you can look this up yourself. $35 trillion in homeowner equity in the US homes overall, mostly single family. And there's uh 17 trillion in equity held specifically by homeowners with mortgages, and there's 11 trillion of tappable equity money owners should theoretically be able to borrow against while they're still in their home. So think about that. Let's just use 11 trillion. There's 11 trillion dollars of trapped equity that you can go and tap into to make a better investment. But while that money is there, it's trapped dead equity. You can't do anything with it. It's trapped in your home. You're not making any money on it because odds are the value of your house will go down over time if your neighbor sells. So it's not a great investment to just keep it there. It's not like it's going to be there for you. Similar to the stock market. All right. So the reason why I bring all this up is one, you got to know where your money is. That's number one. If you want to invest with somebody like me at Bell Capital, here's what I'm looking for assets in our fund. We're looking for stuff like this. Think about that. Would you rather your money sitting, dying in a bank account, savings account, whatever, trapped in some CD where when you take out the money, you're going to get taxed on it? Or would you rather treat this property as a bank? Take your trash cash, take your trash cash that's going down in value. I'll come on this side every day, and then move that money over to an asset like this with professional management, cash flows from day one, 95 to 97% occupied. You get future appreciation because rents are constantly going up, or we're going to force those rents to go up in an asset, something like this, right? Then you also get the tax benefits because you're a partner in the deal. None of the stuff that we talked about on this sheet, cash in the bank, high yield savings accounts, or what bonds, stocks, Bitcoin. Let's see what else is on here. Retirement accounts. All of these things will be taxed. Even your retirement account, when you take money out, it comes to you as earned income. It's going to increase your earned income or where you sit in the tax bracket, and you may pay more taxes. How many of you guys believe that now or in 30 years from now, the taxes will be higher? Odds are they will be. They have been for the majority of my life. But if you move that money into an asset like this, and then you're a passive investor. You're probably going to get a K1, and you're not probably, but you're going to get a K1, and you're probably going to be able to write off all of the cash flow and the benefits to you as an investor, depending on your CPA and your accountant and all the other stuff. I'm not your accountant. You would have to find out one, you might not be able to need to pay money on your cash flow. Two, it may offset some other income from your other businesses and things like that you get to roll into those things. So that's a structure because this is a better place to have your money than what I was talking to this guy about. Bank, savings account, retirement account, or trapped equity in your home. It's not gaining. But this right here is a safer place. This right here cannot be destroyed. Like it'll take an act of God to come and knock down all of these buildings. These are like 200 plus buildings, almost 300 units. Trust me, literally an earthquake, hurricane, tornado, mudslide, all of that stuff. And that's what insurance is for. So we're still covered. You're still better off. Why? Because that's a real asset. It can't be destroyed by pressing the button on the stock market, wiping it out. It's just not how they work. All right. So where do you want your family's money? Would you rather your family's money in paper, sitting someplace where it can be destroyed or eaten away? Or would you rather your family's money in a real asset that's cash flowing, appreciation, you got tax benefits, you got leverage, you have a professional management company and or it's invested in a company like Bell Capital with somebody running the fund and running the deal with somebody like me that you can see, smell, touch, you can pick up the phone and call us. That's different. You can't do that. Fred at Fidelity will never talk to you. I don't think anybody's ever talked to him, right? The leader, the founders. Most of the people at the bank, you aren't going to get them on the phone. Even if you have JP Morgan, you'd have to have like $100 million to just get a meeting with anybody on the upper level and maybe $20 million to start a real account where you actually are having a conversation with somebody who's actually physically managing your money. And that's liquidity, right? You have to have that. With us, you can get involved in Bell Capital with a minimum of 200 grand and you still get to talk to me. That's why I'm doing this. No one is doing this at the level that we're going to be doing this here in San Diego County. No one, no one, right? There's other people out there raising money for deals, but we're going after trophy assets. But I'm doing it with everyday investors like you guys who actually I communicate with on my Instagram, Facebook, YouTube, LinkedIn, real people, because that's what I am, right? We need access to this stuff. So does your family need access to this stuff. That's why I'm doing it. Nobody else is offering that. I compete against other groups that own deals like this. They're institutions. Their partners are institutional investors. CalPERS as a pension fund, UCLA endowment, uh, the the Pennsylvania pension fund, the teachers funds, sovereign funds. I'm competing against people who are looking at these deals with those people. That's their investors, institutions, family offices. I'm going to you guys. I think we should own this stuff. And if we put our money together, right? Get it out of the banks, out of Wall Street Casino, and quit relying on them for our retirement and start relying on these properties. And we compete and buy the same assets the big guys buy. Later, we put together a portfolio, go back to them, and then we say, hey guys, here's what we did. Do you want it? And they'll buy it and we'll make the money instead of making Wall Street rich, which is my goal. So, I hope this helps because his question really helped me to want to communicate with you guys because it was like, dude, like once you find out where your money is and you make a decision, I'd rather my money in real estate than my money in this casino, banks, Wall Street, institutions controlling my money, and then I never get the benefits of it. It really changes stuff. That's why I'm doing it. So this is how wealthy people create wealth right here. Most of them make their money in their business or they make their money because they're engineers or they're doctors or they're high paid professionals. And they all invest their money in what? This level, real estate, if they can get access to it. Most people cannot. So they're forced to use REITs. This isn't a REIT. This is a private equity fund. You get to be an active, you get to be a passive investor. We're the active side, the general partners, you being a limited partner in a deal with us that you can see. There's a real address. There's no question. You can talk to me at any time, talk to people on my team at any time. There's a bunch of professionals that we work with to make sure that we secure the right investment, the right asset, so we can get stuff done. All right. So I'll call them back. But anyways, I appreciate you guys. I hope this video helps you. Where do you want your family's money? Once you figure out where your money is, then you figure out where you want your family's money, and then you make the decision whether it's with me or somebody else. If it's with me, look, I want to invite you guys to do this thing. Set up your account or go to bell-capital.com, bell-capital.com, capital.com. You can do two things on the site. You can schedule a call, talk to myself or somebody on my team, or you can go ahead and you can register your account at the portal. We have a portal, an investor portal. You can go there. You can take a look at the open fund, take a look at the documents. You can review it, see if it's a fit for you. One, you got to have a minimum. You have to have a minimum of $200,000 to invest with us. As long as you have at least 200 grand to invest, we're interested in having a conversation with you. I don't have any illusions somebody's going to be like, yeah, I'm just going to press a button and invest. We want to talk to you, right? That's the thing because we want to make sure that one, you qualify, it's a good fit for you, and you're a good fit for us as an investor because I want good people. It's a long-term investment. Got to have a great attitude. Got to love the idea of real estate, cash flow appreciation, the benefits of that. And you got to have a long-term horizon to want to be in something and do something or be a part of something that's never been done before here. All right. So again, bell-capital.com, schedule a call or set up your account, and then we'll still talk to you. We want to talk to you, or leave me a comment here. What'd you like? What'd you not like? Give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. I love you both, but I'm here for you. If you need anything, feel free, let me know. Dude, you already know, man. Somebody's sales team is on it. They're doing the 3 callback rule. But I'll talk to them later. But because they're not investors right now. My goal is I'm working on investments with you. So you're my priority, not somebody trying to sell me something because I get those all day. I'm sure you do too. But anyways, I appreciate you guys. I'm here for you. Share the video, like the video, comment. Like I said, thumbs up, thumbs down. Either way, I'm here for you. Leave me a comment. Let me know what you like. And where's your money? And where would you like your money, your family's money to be long term? All right. Love to hear from you. Have a great day today. Let's get after it, gentlemen and ladies. Boom.